Hey there, this is the weekly Canadian real estate news recap here on Bald Prairie Real Estate. My name is Matthew Pfeifer. I'm a real estate agent in Regina, and that is my trusted assistant, Matilda. Last week, I talked about how Royal LePage was forecasting, because they'd done a revised forecast saying that home prices in Canada year over year were going to increase by the time we got to the end of the year. Now the Canadian Real Estate Association has come out with their revised forecast for the 2023 Canadian housing market, and they're saying that prices are going to decline. And if you've been watching my monthly Canadian housing market updates, which if you haven't, you really should, but we're seeing home prices in Canada start increasing. So what the heck is going on? Because this is starting to get really confusing. We're going to be talking about that Canadian Real Estate Association revised forecast, as well as what's going on in the rental market. I've got the newest rent report, inflation, a whole bunch of other fun topics, and what has seemingly become a weekly topic in these weekly news recaps: real estate agents behaving badly. I got a doozy for this week. But as always, let's start off with another terrible joke. What is a sea monster's favorite food? Fish and chips. If you have a terrible joke that I can use in a future episode, put it in the comments below. Let's get into the news. Starting things off, we're going to get into real estate agents behaving badly. This one is out of Vancouver. Now, a little bit of context before we get into this article because it's important. In this case, this is buyers purchasing a condo or a strata. When you are buying a condo, generally one of the conditions you're going to put on your offer is to review what we call the estoppel package. So this is going to have a whole bunch of information that pertains to the condo corporation. Things like their most recent meeting minutes, the financial picture, how much money they have in the bank, insurance policies, bylaws, etc. Whole host of information. And the sellers are going to provide that information. You're going to get a chance to review it and then decide if you still want to buy this condo or not. Because obviously, if it's not in good financial health or there's some rules that don't work for you, well, you're probably not going to go ahead and buy that condo. In this case here, this real estate agent, the buyer's agent, was provided this information. They passed it along to an assistant or a junior agent, assumed that that agent had gone through the estoppel package with the buyers, but that never happened. So then they went and removed all the conditions, made it a firm sale. The buyers go ahead to move in and get handed a $50,000 bill because this particular condo had almost $2 million, I think it was over $2 million in work that needed to be done. So that gets divided up amongst the current owners, which now these buyers are. And of course, they probably weren't not only expecting that $50,000 bill, but they didn't have the resources to pay that $50,000 bill. So a whole host of problems. One, they now can no longer buy this property and actually took a $40,000 loss after selling it. And the real estate agent, who should have been providing this information to the buyers and should have been reviewing it with them, didn't do that. They were fined $35,000, and there's some additional legal closing costs or legal fees, disciplinary fees, etc. What isn't stated in the article is whether the buyers are going to receive some or all of this $35,000 to cover some of their losses. When you're buying a condo, you want to get that estoppel package, review it yourself. I'd also recommend sending it to your lawyer, have them review it as well to make sure you fully understand what you're getting yourself into when you're buying a condo, because you're not just buying a property, you're basically also buying into a corporation. One of the biggest news topics this week was inflation. Stats Canada was out with the newest numbers. Last month, it was 5.4%. This is the headline number. It dropped to 4.3%, so a substantial decrease. And core inflation, which is, of course, one of the big metrics the Bank of Canada is keeping an eye on, that dropped from 4.8% to 4.5%. Now, the historical average on that is actually a little bit higher than the typical headline inflation. That's usually hovering around 3.5%. The Bank of Canada does aim to have that headline inflation number around 2.5%, but the core inflation number is one that they're keeping an eye on right now. That matters for interest rates because the Bank of Canada is basing what it does with interest rates on what's going on with inflation. Now, we have seen recently that the fixed 5-year bond market, or for mortgages, is trending down. That's because the market is projecting that the Bank of Canada is going to drop interest rates at some point this year. And really that kind of leads us to the next statement, and that is that it's not really a question of if the Bank of Canada will drop interest rates. It's now become more of a question of when will the Bank of Canada drop interest rates. I should actually probably do a poll on that, maybe put that up in the next week or two here. When does the Bank of Canada drop interest rates? Maybe you guys let me know in the comments below when you think that's going to happen. Right now, we've seen 5-year fixed rates dropping below 4.5%. Of course, variables are at that 5.5% to 6% range. Generally, that's flipped. Variables are going to be below fixed rates. You typically will pay a premium to have that payment security. So at some point here, either variables have to drop or fixed rates have to come back up to get to that proper kind of flip equation here. And speaking of interest rates, it's not just homeowners and want-to-be homeowners that are being impacted by interest rates. It's builders and developers. The cost to borrow money has gotten a lot more expensive, which makes them a lot less enticed to go out and build more properties. So what we're seeing is housing starts trending down. CMHC tracks this. Now they come out with this every single month, and it looks, the way it's reported, like it's how many housing were started that month. It's not. It's a year-over-year trend that they're following. The number was 214,000 this past month. So we typically see about 200 to 250,000 homes built in Canada per year. So we're kind of trending to the lower end of that range right now. This should not be surprising, not only with the cost of interest rates, but also the cost of materials. It's gotten a lot more expensive to go out and build homes right now. And I've said it for a long time. We have a shortage of homes in this country, and we're building fewer homes while seeing more people come to Canada, because right now our immigration and our home construction policies just don't line up. If you take, for example, last year we saw a population increase of approximately 1 million people. Take the Stats Canada average of 2.51 people per house, means you're going to need about 400,000 homes to house 1 million people. And again, we're on track to see on the lower end of 200,000 homes built in a year. So when you see a shortage of 100,000 or more homes in just one single year, that's going to be a problem. It's going to cause an issue with the price of rent and the price of home ownership. Those are going to trend up because you have more people competing for fewer and fewer houses. And right now, with our current immigration policy and what we can build in a year, those aren't in line, and we're likely to see this same type of problem year after year after year until one of those two changes. And let me make this very clear. I am not against immigration, but what I am against is welcoming people, and we should welcome people to Canada. But now we have an issue of not just people we've welcomed to Canada, but current people that live in Canada not being able to afford a home. We're not doing anybody service by not making housing affordable and accessible to everyone, simply because we can't build enough houses right now. Rentals.ca is out with its most recent rent report. Again, I'll link this in the description below. And for the first time since November, we saw month-over-month rent increases. This shouldn't be that surprising because typically November, December, January, February is when we see rent slow down. Rent prices typically drop in those months, and then they pick back up in the spring market. So we saw a 1% month-over-month increase in the price of rent. It's 11% year-over-year, taking the average cost of rent in Canada over $2,000 a month. Shouldn't be surprising that Vancouver and Toronto are the two most expensive cities in Canada to rent, where a one-bedroom apartment starts at $2,500 a month in Toronto. It's more expensive in Vancouver, and a two-bedroom apartment is $3,200 a month, again in Toronto, and more expensive in Vancouver. If you're looking for more affordable places to rent, the Prairie's got you covered, where typically the cost of rent is 1/2 to 1/3 of what you would pay in Toronto and Vancouver. Now let's get into the headline article for this week, and it's the Canadian Real Estate Association having their updated quarterly forecast say that home prices in Canada would decline 4.8% in 2023. Of course, this basically goes directly opposite to what I reported last week, where Royal LePage said home prices would increase 4.5% year-end 2023. But first off, this is not really an apples to apples comparison, because they're basically talking two different languages here. Now, of course, they got two different trends, but the Canadian Real Estate Association is using average home price. And I've talked about that a lot in previous videos, that average home price has a lot of volatility in it. It can be skewed by the type of sales and the composition of sales that are happening. And in fact, the Canadian Real Estate Association even says in this press release that part of the reason why they revised their forecast is because we saw stronger sales in Ontario and British Columbia, which of course is the two most expensive real estate markets in Canada. So when they see an increase in sales or in a stronger market, that increases that average price in Canada more so than if we saw a strong market in, say, the Prairies, because home prices are much lower there. And that's what's frustrating, is because they have the home price index, Canadian Real Estate Association produces that and then uses average price in their press releases. And Royal LePage doesn't use the Canadian Real Estate Association benchmark price, they use their own benchmark price. If there's one thing that real estate agents and the real estate industry does very poorly in this country, it's communication and consistency, because you'll probably see numbers reported in average price, median price, and benchmark price, and they're all different and they can trend in different directions, and that can be very confusing if somebody's trying to just learn what the heck is going on in the Canadian real estate market. That's why I like to use just the Canadian Real Estate Association's benchmark price and all of my monthly Canadian real estate market updates. And then I use the 5-year comparison, because when you're using average price, and especially when you're using average price compared to, say, the previous year, there's a lot of volatility in there, especially with the last couple of years that we've had with prices going all over the place and sales going all over the place. When you're comparing average price, which has all those volatilities built in, to last year, you're not going to probably get a very accurate picture of what is going on. So that's why I use that 5-year average and the Canadian Real Estate Association's benchmark price in my monthly Canadian real estate market updates. This, of course, probably has you asking, well, are home prices in Canada going up, or are they going down? Should I buy a house this year, or should I wait for a couple of years? And I've seen, whether it's in my comments section, other YouTube channels, in the news, all different pieces of advice. You should buy now, you should wait. Prices are going up, prices are going down. Well, all of these forecasts are nothing more than an educated guess. Take them for entertainment purposes only, because nobody has a crystal ball as to what is actually going to happen. And I want to stress this. If your plan to buy a house or not buy a house relies on something in a forecast being true, that is not a sound plan to buy a house or to not buy a house. You need to buy a house when it makes sense for your personal situation, and nobody knows your personal situation better than you do. Take all the information and see how it applies to yourself. Now, I have a couple of things I think are very important in the decision of whether to buy or not to buy. The first one that I think is one of the most important is, obviously, you have to have the financial resources and the job security to make that purchase. So that's the first one. Second is that you're going to be living in this home long term. Real estate is not a get rich quick scheme. When you're buying your primary residence, you're buying it for yourself, and you're expecting the prices will go up and they will go down over time. But if you look in the long run, real estate prices do increase. The longer you're in the home, the less likely ups and the downs of the market impact you negatively. And third is that buying a house is a lifestyle choice and it's a lifestyle sacrifice. So if you're buying a house, it must improve your lifestyle. And what's improving your lifestyle is a very subjective question. But when you look at all the information, you should say to yourself, if I buy this house and I'm going to be here long term and I have all the job security, will this make my life better? And if the answer to that or any of those questions is no, it's probably not the right time to buy a house. If the answer is yes to those questions and all of those questions, maybe then it's the right time to look at buying a house. And if buying a house is the right decision for your personal situation, you don't already have a fantastic real estate agent, if you look in the description of this video right below here, there's a link to my calendar where you can book me in for a buyer's consultation. I'm going to phone you up, learn about what's important to you in a house and in a real estate agent, and then I'm going to get you paired up with the best real estate agent in your market. It can be anywhere in Canada. It doesn't have to be my market in Regina. I've got great real estate agents across the entire country that would love to help you out and find that perfect house. And if you want to know more what's going on in the Canadian housing market, well, right here is my most recent monthly Canadian housing market update. Check that one out. If you like this video like, subscribe to Bald Prairie Real Estate if you haven't already, and leave me comments below. As always, thanks very much for watching.